Well, we'll move on. Ashley Menezes, who's the partner and COO of ChrysCapital, expects 2025 to look much like 2024 for the capital markets, but he believes valuations in India are running high. Now, speaking on the sidelines of the IVCA Conclave 2025, he shared his take on the market outlook with my colleague, Rachana, Dhanrajani. Take a look at that conversation.
I think the capital markets have been strong, in 2024. You're seeing a little bit of a dip, but I don't think that's going to be radically different in 2025. So the opportunities will be there, both in terms of companies going public, etc. So from an exit perspective, that route and that avenue is open. Valuations tend to be high in India, and I think that's a reality that one needs to get used to. But I think there are investment opportunities. So there is a funding winter in certain sectors or certain types of companies, but I think generally we're still seeing 2024 was slow, but not a full stop. And so we think things will improve from that front. You'll see a lot more activity in 2025 across sectors.
What are you think themes that are being picked on by others as well for the rest of the 2025 and going forward?
So one is, as an industry, today, alternate capital encompasses the whole gamut of investment, opportunities and ranges and categories. So it could be things like credit, things around, AIF, Cat3. We've seen, infrastructure, sustainability type projects, climate impact funds, etc. There's a whole bunch of those. So from an industry perspective, we are, it's encouraging to know that the industry has reached at some level of maturity where you're seeing a lot of the action, even buyouts, right? ChrysCapital, as a fund, we will try and focus on things that we know and understand well. So some of the sectors, technically we're sector agnostic, but the sectors that we like are financial services, pharma, healthcare, enterprise tech, a little bit of consumer, new economy, a little bit of manufacturing. So those are some of the sectors that we followed, tracked, researched and understand better. I think we'll try and do a lot more in those sectors. Obviously, if there's a right opportunity, we'll do more things beyond that as well.
Okay, we're going to take